Brookfield Corporation is up slightly after the company reported its Q1 earnings this morning. It is also the largest position in my portfolio, as the company is projecting strong growth over the next 5 years and is trading for what I believe is an attractive price relative to that growth. So in today's video, we are going to go through Brookfield's earnings, and I will share my thoughts on the business, its results, its price today, and what I am planning to do with my position now. So with that being said, let's just hop right into the video and get into it. This right here is the highlights from the company's earnings, and this says, we expect the positive momentum across our asset management, wealth solution, and operating businesses to drive continued strength over the course of 2024. So right away, the company is saying that it is projecting continued growth throughout the remainder of the year, and then down here it says distributable earnings before realizations increased by 10% per share over the last 12 months. So it seems like distributable earnings over at Brookfield has increased by 10% year over year. We can also see that the distributable earnings were just over $1 billion, where last year for the same quarter they were $945 million, and on a per share basis, the distributable earnings came in at 77 cents per share, which is up 5 cents year over year on a per share basis. Now, the main bearish point that I have heard towards Brookfield so far today is that this company is projecting 20 to 25% annual distributable earnings growth over the next 5 years. And obviously 10% annual growth is well below their 20 to 25% projection. So I do think that investors and the overall market are really wanting to see Brookfield's overall growth start to pick up. However, I am going to touch on this point later on at the end of the video when we start to talk about Brookfield's valuation today, because I don't actually think that Brookfield's valuation today is factoring in even 10% annual growth going forward, which does kind of provide a little bit of a margin of safety if the company does not end up meeting those 20% annual targets. But I also do believe that the company will hit those 20% annual targets, which I also will get into later on in the video. But for now, let's move on to the next screenshot and take a look at where the distributable earnings came from all of Brookfield's different businesses. So right here, we can see that the asset management distributable earnings were $621 million for the first quarter. This is actually down year over year, but we do have to keep in mind that Brookfield BN owns 75% of the asset management business now, because 25% of the asset management business is actually listed on the stock exchange. And last year in the first quarter, BN did own 100% of that business, so it does make sense as to why this is down year over year. But moving on, Brookfield's Wealth Solutions business produced $273 million of earnings, which is up 88% year over year from $145 million. This is also one of the areas of the business that Brookfield is really focusing its attention on right now. And this is the business that I do believe Brookfield is spending the most money on to actually grow. So growing the wealth solutions and insurance business is Brookfield's #1 focus right now. And they actually are projecting the future growth of the business to mostly come from the wealth solutions and asset management business. So it's very, very good to see that this is up 80% year over year. And I do believe that this will continue to grow quite strongly in the future. And this is where a lot of the company's overall profit growth will come from. Now, what also surprised me is Brookfield Property Group saw its distributable earnings grow by $26 million year over year, which is growth of 18%. So it seems like Brookfield's property or its real estate segment of the business is actually performing better than it was last year, and the profits of this business have increased year over year. Now, overall distributable earnings with the realized carried interest is sitting at $1.2 billion. And again, very quickly, for those of you who may not know, the realized carried interest is basically Brookfield selling off some of its investments, and these are the gains on those investments. So the operations of the business generated $1 billion, and then the gains on their investments generated roughly $200 million, and that is how we get the $1.2 billion in total distributable earnings. Moving on, though, Brookfield discusses their different operating businesses and the wealth solutions they say. Our wealth solutions business, which is our platform for individual investors that includes our retirement services businesses as well as Brookfield Oaktree Wealth Solutions, had a strong quarter generating distributable operating earnings of $273 million and $868 million over the last 12 months. With the closing of the AEL transaction, our assets are now at over $100 billion and annualized earnings are approximately $1.4 billion. So after the first quarter of 2024, and I believe that it was actually in April last month, Brookfield did close the AEL acquisition, which is another insurance business. And after this acquisition, their insurance or wealth solutions segment of the business is now doing $1.4 billion in annualized earnings, which is an increase of about $300 million versus what it was in Q1. So Brookfield essentially just added another $300 million of annualized earnings that should start to show up in the second quarter and provide even more overall growth for the business. Moving on to the operating businesses, we can see that there was a 5% growth in same-store net operating income in our core real estate portfolio over the last 12 months. So Brookfield's core real estate assets are actually seeing their operating income and profits go up, which could also be partly why we saw the distributable earnings from real estate go up year over year. But this is very good to see because I know that a lot of people are very bearish towards office real estate right now. But when you take a look at Brookfield's overall fundamentals, their profits are actually continuing to grow from their office buildings, especially in their core portfolio, which I do think is a good thing to see. And I try to focus on the facts here on my channel, and the profits are going up. Then they continue on and say, in our real estate business, operating fundamentals and market conditions are strengthening. We see many tailwinds for the earnings and valuations of our real estate business, with core operating cash flows continuing to grow, interest rates and inflation peaking and expected to decline. So it sounds like Brookfield is saying that the bottom is in for real estate in general because interest rates are at their peak. Inflation seems to be at its peak right now. So when interest rates start to drop, the natural reaction is asset values go back up. So real estate values and overall profitability can go back up as debt becomes cheaper to take on and overall valuations start to go up as well. So again, it just sounds like Brookfield says that the worst is behind them now, and that the fundamentals of real estate should continue to improve going forward. Now, moving on to the company's earnings presentation. So what I like to do here on my channel is just highlight the overall company's operating distributable earnings, which I do outline here in these red rectangles. Now, the reason that I do this is because this is the actual company's operating earnings. The other earnings that we're taking a look at here on these blue boxes and the other boxes, these are the realized carried interest, or basically the gains that Brookfield is taking on their investments, which is much more volatile from year to year. So when I'm trying to figure out the actual growth to Brookfield's overall business and its core business, the red boxes here are what is actually most important. And we can see that they are in fact going up on a total basis and on a per share basis. So Brookfield's overall profitability is still growing. And over the past 5 years, you can see how the profits have been growing quite strongly as well. Now, moving on to this next screenshot, this is probably the most complicated slide in the entire investor presentation every single quarter. But this slide right here breaks down all of Brookfield's different assets that it owns and all of the different cash flows that the business receives. So the asset management business is now worth about $95.6 billion, and it is producing about $2.6 billion in annual cash flow for Brookfield. The wealth solutions business is also worth about $16.7 billion today, and it is producing about $1.1 billion in annual cash flow now as well. The operating businesses are now worth about $42 billion, and they are producing about $1.6 billion in cash flow. So overall, Brookfield is producing about $5.3 billion in annualized cash flow right now. And again, it is worth noting that now that the AEL acquisition is closed, this number should go up to about $5.6 billion. So next quarter, we should see this number increase by about $300 million just from the AEL acquisition alone. In total, Brookfield says that its assets are now worth about $154.4 billion. Then the company has about $18 billion of debt, which is a net asset value of $136 billion, or about $84.83 US per share. So Brookfield believes that this is the net asset value for the business, and I believe that the shares are trading around $40 US today. So we can see that it is still trading well below its own expected net asset value, which could suggest that the stock is still undervalued today and selling for a pretty cheap price. Now, also, the company is producing about $5.6 billion in annual cash flow, so keep that number in your mind for later on in the video. All right, now let's move on to the shareholder letter. And this says, our wealth solutions business will soon generate over $2 billion in annual cash flows. So remember, right now, this business is generating an annualized cash flow of about $1.1 billion. After the AEL acquisition, it will be $1.4 billion. And now Brookfield is saying that it's actually projected to grow to $2 billion in annual cash flow in the near future. So this is a massive business and it is growing very quickly. Then Brookfield says, our guiding principles from the start have been to focus on delivering 15% plus returns on equity while managing downside risk. Our expertise is in investing. It is not in making money from insurance. In my past videos, I have explained Brookfield's insurance business and how it is a very low risk insurance business. Basically, Brookfield is getting all of this cash from the insurance business, and then it is investing that money because Brookfield is basically an investment company. So it invests that money at higher yields and produces higher yields on the money. And then that is the overall net profit from the insurance business. So Brookfield is just saying here, once again, their expertise is in investing not in managing or underwriting insurance. And then at the bottom here, they once again say we are on track to surpass $2 billion of cash flows annually in the next 18 to 24 months from this business. So over the next 2 years, the Wealth Solutions business should grow to $2 billion in cash flow, which is a growth of 43% to the total business over the next 2 years, which is very strong growth on top of 88% year-over-year growth that it just saw in 2024. Then Bruce Flatt writes, great businesses compound wealth irrespective of market conditions. And I completely agree. So one thing, this isn't related to Brookfield right now, but one thing that I just want to say is that great businesses can actually compound shareholder value, even if the S&P 500 is flat or going down. There's a lot of examples of this. Constellation Software is a perfect example of this, but that stock has continued to compound shareholder wealth, and just the stock continues to go up despite what the overall S&P 500 is doing. So the number one thing that I focus on here on my channel is not what the macro is or not what the overall market is going to do, but simply finding great businesses that can compound shareholder wealth and value over the long term. And I do believe that Brookfield is one of these businesses. So then Brookfield gives us this chart over the past 5 years with their compounded annual growth rates to the fee-related earnings, the annualized run rate of fees and carried interest, the annualized distributable earnings before realizations, and the common equity of their plan value. And we can see that they have been able to grow all of these different key metrics by over 15% annually over the past 5 years. So the overall fundamentals of Brookfield are continuing to grow and at pretty strong growth rates as well. Then Bruce also writes, great businesses allow you to turn around and find that 7 years later, the business has doubled in value and you don't even realize that the time has passed. That is basically what he is saying right here, is that over the past 5 years, the business has basically doubled in every single key metric that they focus on. Then he closes off the shareholder letter by saying the primary objective of the company continues to be generating increased cash flows on a per share basis, and as a result, higher intrinsic value per share over the long term. So the company is focused on creating shareholder value by increasing the profitability of the business on a per share basis, which is exactly what creates shareholder value, as I write in my book. So now let's move on to the Q1 conference call highlights. And there's actually only one screenshot that I think is worth showing today. So this one says, our progress in building out the business took its first major step in 2022 through the acquisition of American National. And by the way, this is in relation to the insurance business of Brookfield. At the time of the acquisition, American National has never sold over $1 billion of annuities in any year of its 100-year operating history. In our first full year of operations, we sold over $6 billion of annuities out of American National. In 2024, we are targeting $11 billion of annuity and pension origination. Today, our investment is realizing over 20% returns on invested equity, and our growth prospects are tremendous. So I think that this is just insane. When Brookfield acquired American National, it literally never sold over $1 billion in annual annuities. And then just 1 year later, Brookfield sold $6 billion, or 6x'd the company's historical high. And now in 2024, it's projected to nearly double once again to $11 billion in annuity and pension origination. So Brookfield is massively growing this business and doing an incredible job. And now they're getting over 20% annual returns on their invested equity. That's amazing. This is a massive business. It's growing incredibly quickly, and Brookfield is getting massive returns on this overall business as well. So now I actually want to go back to Brookfield's 2023 Investor Day presentation and one slide from the presentation. And right here, this shows the business's overall growth projections from 2023 to 2028. And we can see that they are projecting distributable earnings on a per share basis to grow by 22% annually to 2028. Then they also show the growth to the different business segments and really where they are expecting all of this growth to come from. So here we can see that the operating businesses, which is the BIP, BEP, BBU, and Brookfield real estate segments, they're actually not projected to see that much growth over the next 5 years. The growth is really going to come from asset management, insurance solutions, and cash reinvested back into the business. But overall, the insurance business and the asset management business are where Brookfield is really focusing its attention on growth going forward. And we have also seen that the insurance business grew 88% year over year and is projected to grow by 43% again over the next couple of years. So the insurance business is growing incredibly well and actually exceeding my own expectations. So what I want to see now is the asset management growth segment of the business start to pick up and see that 15 to 20% annual growth that Brookfield was projecting as well. Because if they can get the asset management business back to growing significantly again, then I do actually believe that Brookfield can hit this aggressive 22% compounded annual growth rate over the next 5 years. So now let's talk about Brookfield's valuation today. So the company is trading for a price of about $67 billion on the stock market today. And we saw that the company is, as of today, producing about $5.6 billion in annualized cash flow. This means that the business is trading for about 12 times cash flows today, or 12 times distributable earnings. And in my opinion, this is not a very high price to pay for a business. I mean, if we go 100 divided by 12, then this means that Brookfield could offer investors about an 8.33% yield on the cost of the shares today, and the business still grew 10% year over year. So even on Brookfield's lower growth this quarter of 10%, I think that an 8.3% yield growing 10% annually is still an attractive price to pay for a business. Now, if Brookfield can actually continue growing more quickly and accelerate that growth through the asset management business and hit those 20% plus growth rates that the company is projecting over the next 5 years, then an 8.3% yield on cost growing 20% annually is very attractive. Or you could do the reverse of that, which is a 12 price to free cash flow for a business growing 20% annually. So regardless of if Brookfield is going to continue growing at 10% or 20%, I do actually think that the stock is still quite cheap today. But to be clear, I do want to see the company's growth rates pick up in the second half of 2024, which is what the company is projecting. And I do actually think that their overall business plan for 2024 does make sense. And I do also think that it makes sense as to why the growth was slightly muted in the first quarter of 2024. There's also been quite a few business updates with Brookfield and with a lot of other stocks that I follow here on my channel. So I am going to do a video updating everyone on all of the recent news that came out, because Brookfield Renewables, which Brookfield Corporation does own a large position in, that company just announced a massive deal with Microsoft. And Brookfield Corporation has also sold off some real estate assets, and they also recently did a pretty attractive acquisition. So I'm going to make a video dedicated to going over all of the recent news with Brookfield and Alibaba and Chinese stocks and some other stocks in my portfolio. So if you want to stick around and see those videos and you're not subscribed to the channel, then make sure you subscribe to the channel to see those as well. And if you want to support my channel further, then the number one way to support my content and support my work here on YouTube is to go and sign up for my Patreon. By signing up for my Patreon, you also get a bunch of additional benefits. You can see all of the stocks that I am buying and selling in real time, because I notify my Patreon every single time I buy and sell a stock. You can also follow along with my personal portfolios. You get Patreon only videos, Patreon only stock picks that the YouTube channel does not see, and a bunch of other things such as Discord access. So if you would like to support my channel and my work further and also get a bunch of additional benefits by doing so, then seriously consider going and checking out my Patreon. But again, with that being said, thank you all so much for watching. I truly do appreciate it, and I really hope to see you all again in my next one.